The NYA to SPX ratio, basically value versus growth, shows that growth pushed down again to this dashed line here in red that already has a bottom. It did not touch it and started heading up. And knowing what we know from just viewing the New York high-low chart for the crossover of the 5 in blue above the 10 in red, that it's time to start accumulating value stocks, not too heavily, but start laddering into some value like financials, energy, healthcare, and even some technology stocks if you're looking outside of the United States for value. Here's one here that I just did a scan on, just looking for value in the technology sector. And it's called ST Microelectronics. It's over there in Geneva, Switzerland. So it's not Chinese. And here's their quick fundamentals. I don't know what happened here. There's no reporting for the previous quarters. It's always questionable. The price to earnings ratio is at 10 or 11, so that's not too bad. The price to book is within my criteria. I like them 1 to 3. As high as 3. This one's a little over 3.35 times their book value. And the return on equity is pretty darn good, 31%. And they have some decent cash flow here, but they're spending a lot on CapEx, as you can see, $3 billion or so. So again, their market capitalization is $42.5 billion, and their long-term debt is $2.5 billion. So that's a fraction of their market capitalization. I don't see anything wrong with their total assets, $20 billion, total liabilities, $7 billion, not bad. And their operating income is above their operating expenses, but that's probably that high CapEx expenditure. So they're trying to catch up with NVIDIA and the likes of them. So they're out there trying. This might not be a bad one to look into and do more due diligence than what I'm doing here, but I thought I'd show you that it is possible to possibly find some value within the technology sector. Definitely not within the United States, though.